How Biden's estate tax plan will hammer middle class taxpayers. It's gonna be this can't get through, man. It can't. Anyway, I did a video today earlier where I said I don't mind his capital gain tax rates on people making $1 million of capital gain or of income. That doesn't bother me. What bothers me is his estate tax plan. This is just nuts. And sadly, Snippy Joe doesn't know what he's doing, man. No way he'd be advocating this. Kamala, well, she doesn't, she's dumb as a rock. Sniffy Joe is dumb as a rock too. Both of them are, because everyone says, why you only say Kamala's dumb as a rock? Because she's black? She's not, dude. I mean, she's Jamaican, right? Isn't that her dad Jamaican and her mom Indian, or vice versa? She's not American black. And by the way, Sniffy Joe is dumb as a rock too. In fact, Sniffy Joe is probably stupider than Kamala, or more stupid. So let's read this article from National Review. Biden's plan will raise taxes on the middle class, and it's going to be ugly, man. Look, I'm not the biggest fan of National Review anymore. I was a subscriber since 1992, a big fan until they went completely left wing. There's a couple guys who went to write for Washington Post or CNN or both, I can't remember. And I said, what's National Review guys doing writing for those firms? And then they went anti-Trump, and just the irony of it all, by the way, is that the John O'Sullivan, who used to be the publisher of the National Review, I don't know if he might still be, he said that any organization that isn't explicitly right-wing will go left over time, and voila, that's the National Review. Bill Buckley was disappointing in the latter part of his life, by the way. As he got older, he started wanting more and more regulations on things like cigarette smoke and all that. All right. Anyway, so I don't know who Daniel Pia is, but we're going to read this. Biden's plan will raise tax on middle class. All right, so Biden vows to eliminate the so-called step-up basis rule for inherited property. The president refers to this loophole that allows the rich to game the system, as a loophole that allows the rich to game the system. There's no loophole. It's been a specific rule since IRC Code 1014, which was part in 1954, and is now under attack as Democrats look for ways to make more of your money. So we'll go to a couple examples of this. Suppose your parents own a home worth $200,000. They purchased the home for $50,000. All right, if they gift the home to you prior to their passing, your basis in the home is theirs at $50,000. Which means if you sell the home for $200,000, remember the fair market value is $200,000. The basis is $50,000. So $200,000 is the fair market value. The basis is $50,000. All right, so that means you have $150,000 is the unrealized gain, either to your parents or to you. Someone has a unrealized gain of $150,000. The thing is, if you inherit that property at their death, this is completely wiped away. All right, so your basis is the date of death value of the property of $200,000. So if you turn around and sell this property for $200,000, you'd pay no tax on it. On the other hand, if they gift it to you while they're alive, your basis is this $50,000, and then you'll have to pay tax if you sold it at $150,000 long-term capital gain. I cannot tell you how many widows in particular, they'll add their daughter, or even worse, give the house to their daughter or their son, but generally their daughter, so their daughter can avoid probate. And I've seen this happen so many times. I'm like, don't, for the love of the good Lord, don't do that, man. That's a bad mistake. Well, I don't want them to go for probate. Okay, so instead let's have them pay long-term capital gain tax on the amount of money on the house that you give them. It's stupid. Don't do that. Please, 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 please do not gift your home to your children so they can avoid probate. It's bad planning. All right, so Biden's trying to get rid of that. That's long-term. That's a tax on the middle class. Now, Biden will say, but Josh, let's see, one second. All inherited property will be taxed on the sale at the capital gains rate. All right, we'll keep going here. In general, the gain would be calculated on the difference between the sale price and the price at the date of death, the fair market value, which is insane to figure that out. You're not going to be able to figure that. That's nuts. All right. Anyway, so right here. One consolation is that Sniffy Joe appears to be contemplating exempting the first $1 million in unrealized capital gains. All right, that sounds good. You're like, hey, Sniffy Joe's looking out for us. All right. But they talk about some of the things you can do right now to avoid all this. But meanwhile, keep an eye on the estate tax too. Sniffy Joe wants to cut the threshold to $3.5 million, and increase it to 45%. So we're going to talk about that. Now, he doesn't say anything about portability here, which means I die, I don't use my estate tax exemption. Charlotte gets her own and mine, so she gets to double her estate tax exemption, which means that you don't need to do Q-tips and things of that nature. It makes it so much easier. But we're going to assume that Sniffy Joe doesn't know what the portability is, and so as such, they're going to get rid of portability. So what does that mean now? All right, you got three things happening here. All will kill the middle class taxpayer. So we're going to use an estate of $5 million. Now remember, a estate of $5 million sounds like, I don't have an estate of $5 million. A lot of times the Democrats don't subject to these laws for inflation, i.e. the Social Security tax bill in 1983, which President Reagan did sign. But I know the Democrats control the House. Every tax legislation is through the House first and foremost. And I think they control the Senate because I think the Republicans lost it in the 1982 elections because there was a pretty significant recession. So if memory serves, the Democrats were in both chambers of Congress, and Reagan signed the Social Security tax bill. It was not adjusted for inflation. 1993, Clinton and both chambers of House of Congress are owned by the Democrats, and that was not adjusted for inflation either. Alternative minimum tax, the old dastardly AMT, this Democrat bill, was not subject to inflation. Bush had the first IRMA, and then Obama got rid of the inflation adjustments as well on net investment income tax plus IRMA, and then that has since been revisited because of Paul Ryan or Boehner or something like that. But remember, Democrats are good at saying we're not going to make these inflation adjusted. And a lot of times on the estate tax, it's not inflation adjusted either. $675,000 was the amount that was subject for an estate tax for many years, as a matter of fact, without being inflation adjusted. $675,000. So remember, everything in your estate is what you own at death, to include your life insurance, your real estate assets, your IRAs, 401ks, everything. So we're going to say you have an estate between, so you die, you leave it to your spouse, assuming there is no taxation on your spouse. I can't imagine even Sniffy Joe would be that dastardly. So your wife has $5 million of an estate at death. And we're just going to assume that there's only a $3.5 million exemption. All right. So we're going to assume there's $1.5 million of taxable estate. All right. Because she has $3.5 million exemption. So that means you take the $5 million fair market value of her estate, you subtract by the exemption, that leaves a taxable estate of $1.5 million, which would take our trusty calculator, 1.5 times 45%. That's $675,000 of taxes that old Josh will have to pay. No, we won't say Josh. That Liam will have to pay, because Liam is my only kid, we'll just say. So he inherits a $5 billion estate. He get a $3.5 million exemption from mom. He has to pay tax at 45% on $1.5 million. He'll have to pay tax within 9 months out of her date of death. So he has 9 months to raise that kind of scratch. Liam says, I can't do that unless I sell some of these assets. All right. So what's Charlotte's asset base? Well, we know it's $5 million, but what's her cost basis? Well, if we look at my Grammy and Grampy, they bought a house in Los Altos, California, in 1967. That sucker is worth a lot. They got 401ks. All right, they got a lot of money in 401ks because they live frugally. So let's just say their cost basis, when all is said and done, is all of $1 million. That means they have a $4 million net unrealized gain. Now, normally, because of step up in basis, Liam would inherit this completely tax-free from an income tax. And you still have to pay the capital gain, but he could sell $675,000 and not pay 2 miles to it, because you say, all right, I'm going to sell a mutual fund for $675,000 because I inherited it at the date of death. The step up in basis, I'll sell for $675,000. You don't have to pay long-term capital gain. I'll turn around and transition that to to the IRS. But in this case, he has to get $675,000, in which what? To pay the capital, the estate tax. So he's going to have to sell property. Let's just say he sells $2 million of property. All right, so we're going to do a simple. He's going to sell $2 million of property, and proportionally only $400,000 will be long-term capital gain. It would be cost basis. So bear with me just a second. So look, He's got $5 million. The first $1 million is his cost basis. That means 80% is net unrealized appreciation. So he's going to sell $2 million of property. $2 million. And property, that means anything that he's inherited. Stocks, bonds, mutual funds. At $2 million, of which 80% is unrealized gain, which means $400,000 is his cost basis. 1/6. All right, so he's got a $2 million he's going to sell because he's got to raise that money for the taxes, the state tax. $400,000 is the cost basis that he inherits from his mom. $1.6 million is subject to long-term capital gain at 39.6%, because that's Sniffy Joe's thing, is that if you have over $1 million of long-term capital gains in any given year, we're going to be subject to 39.6%. 1.6 million times 39.6, that he will pay $633,000 of long-term capital gain on that 1.6 million. All right, so 1.6 million, he'll pay $633,000, and that will leave him $967,000 in which to pay the $675,000 of estate tax. So 967 minus 675. So when all said and done, of that $2 million he sold, in which to pay $675,000 of estate tax, he's only going to be left with $292,000. $292,000. That's it. $292,000. Now they'll say, oh, but there's going to be an exemption because right now there's an IRD exemption if it's subject to estate tax. Okay, I didn't see that anywhere in Sniffy Joe's proposal. Maybe it's in there. Show me. I haven't seen it. Maybe they'll let you write off capital gains that you have to use to pay estate tax. Maybe they'll let you use estate tax. You can write that against the long-term capital gains on assets you have to sell. Okay, where is it? Where's the proposal for that? So there's three things here. Getting rid of the step-up basis is evil. That's just straight up. First of all, that is a lawyer dream and a forensic accountant dream because no one knows what their bases are. No one does. And getting rid of the step-up basis is a destroying of middle-class wealth. There's just no other way around it. By design. The Democrats don't want the middle class. They want the rich, which they are part of, and they want the poor, which they boss around. That's the Democrats. They don't care about the middle class. So I wish the Republicans would step into that void, but Republicans are... I don't want to be called racist. Oh no, dude! You put your hat on, you're gonna be called racist. I mean, literally in this day and age, you just walk outside and take Donald Trump, Hitler breathed the fresh air. You're racist. You're just like Hitler. If Republicans haven't figured this out by now, I get nothing for you, man. All right. So get rid of step-up basis is evil. All right, reducing estate tax exemption is not evil, but is bordering evil when you factor in you're getting rid of the step-up basis. Those two things are straight up evil. And the last thing, the increase in the long-term capital gains rate for people with over $1 million in long-term capital gains, that in of itself doesn't bother me. Combine that with the other two things, and it's an appetite for destruction. Welcome to the jungle. And it's evil. But this is the Democrats, man. Maxine Waters said, I remember my dad telling me this like in 1989 or 1990 or something like that. I can't remember. A long time ago. Maxine Waters, that clown. Yeah, she's dumb as a rock too. Oh my goodness, you called another black woman dumb as a rock, dude. How many, look, what's the name? Beto O'Rourke, John Ossoff, they're all dumb as rocks, man. Dumb as a rock. Well, I guess Beto and John are probably not that dumb because they married rich ladies in which to finance their whatever they're trying to do. The soy boys I've ever seen. Anyway, so Maxine Waters says, what is people griping about a 39.6% tax rate, whatever it was back then? They're lucky we're letting them keep that. And I remember my dad's a big liberal back then. He goes, wait, this not your money. This is our money. What do you mean we're lucky you keep our money at 39.6? And I'll never forget that. I'm not sure if that was the thing that broke the camel's back for it make him go libertarian, but I'll never forget that. I remember him saying, whoa. It's not your money. You don't let us keep your money. You ask us to take some of it, and we grant it to you or we don't. But you don't say, let us keep our own money, fool. I mean, look, the Democrats haven't changed. They like the rich, and they love the poor, and they don't want to. They don't expect they'll be in the poor, so they'll be living like the Hunger Games, while you and I are shoveling Finney's poop for a living. So you got to fight back on this, man. This is bad. All right, we'll see you. Love to hear your comments.